Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped to just above the 98 level last week, hovering near a 2-month low and heading for its third consecutive weekly decline. While the cut was widely expected, the Fed delivered a less hawkish outlook than markets had anticipated, putting renewed pressure on the dollar. Chair Jerome Powell stated that further rate hikes are highly unlikely, noting that the policy debate now centres on holding rates steady versus cutting further. WTI crude briefly fell below $57 last week. The International Energy Agency reaffirmed its view of record global oversupply, with inventories at their highest level in 4 years. While OPEC maintained a more balanced outlook for longer-term supply and demand, oil prices remain sensitive to macro forces, particularly the US dollar and interest rate expectations. Meanwhile, ongoing geopolitical risks, including disruptions to Russian energy infrastructure, have helped limit downside risks and kept prices supported near key support zones. Gold surged above $4,300 on Friday, testing the record highs set in October as expectations for further US monetary easing continued to build. Fresh signs of cooling in the US labour market strengthened market pricing for up to 2 rate cuts in 2026. Jobless claims rose more than expected, reinforcing the Federal Reserve's decision to deliver its third rate cut of the year. Together, these factors have provided strong and sustained support for precious metals. Yen stabilised near 155.6 on Friday. Over the weekend, the pair saw sharp downside volatility as markets digested the rate cut. On the Japanese side, expectations for a December Bank of Japan rate hike strengthened further after Governor Ueda signalled rising confidence that inflation can sustainably reach 2%. Japanese bond yields surged, with the 10-year yield hitting its highest level since 2007, while US yields declined. The narrowing yield differential has undermined the structural support for the yen and points to a medium-term corrective downtrend. Euro climbed back above 1.17 last week. The pair was supported by broad US dollar weakness. European policymakers signalled that further rate cuts may not be necessary next year, prompting investors to scale back expectations for additional ECB easing. At the same time, the policy divergence between the ECB and the Federal Reserve has become more pronounced, lifting the pair nearly 2% over the past 3 weeks.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.